Hi YouTube, it's Janelle here. In this video, I just want to break down some really basic tax stuff because I know I waited a really long time to file my taxes this year, but only because I knew that I had to pay a lot more taxes than I did before. And the reason why is because I had 2 different jobs last year, and then I had the summer break where I went to Barcelona, and I posted about that on my channel. And during that time, and even throughout the year, I was doing a lot of different freelance jobs. So I knew that I was going to get a lot of contractor pay. So that's going to come on a 1099 form and not a W-2. So I know my W-2s throughout the year I've been paying taxes, but not my 1099s. Now I realize that that's something I understand, but most people actually don't really understand the difference there, and in general think that we just pay taxes every year around April when tax season comes. So I just wanted to put this video out there to kind of explain, first of all, that's not true. That is not true at all. So if you have a job where you get your paycheck, and when you look at your pay stub, you see taxes on there, payroll taxes and income taxes. So that means that you are paying taxes all throughout the year. Every time you get a paycheck, they take a little cut from that paycheck. Your job takes a little cut from that paycheck, whoever your employer is, and they send that little cut to the IRS directly. And then whatever's left over, whatever the rest is, that they give to you as your paycheck. But most people don't understand that, and they think that they just have to pay taxes, or that taxes happen when tax season comes. So that's not true. You're paying taxes all year long, right? Now, at the end of the year, what happens is, depending on how much taxes you already paid from all of your paychecks, now the government's going to look at all of that up and say, okay, so you owed this many taxes based on how much money you earned, but that amount that you owed might not be the same as the amount of taxes that you paid slowly from all of your paychecks. So those 2 numbers could be very different. The taxes that you've paid so far from your paycheck and the taxes that you actually owe based on how much money you earn, they could be very different. Either one could be more, one could be less. And so the government's gonna put them next to each other and say, if you basically only took out a little bit of taxes all throughout the year, and you took less taxes than you were supposed to from your paychecks, because right now they were supposed to take more taxes from you, and they didn't. That means that right now you owe the government more taxes because you were supposed to be paying more throughout the year from your paychecks, and you didn't. So that might happen if, for example, when you fill out your W-4 form, when you get a job, you fill out your W-4, you put your name, put your social, put your information, your address, all that easy stuff. And then it gets to the hard part where you have to claim a certain number of allowances. Now, a lot of people who have kids or who are married, they have a lot more allowances. Somebody like me, single, I'm not married, I don't have any kids. I always just put either 0 or 1. If I could put 1 to just claim myself, or I can just not claim that and just put 0. The lower the allowances that I put, the less allowances, that means they're going to take more taxes from all of my paychecks. They're going to withhold more taxes. But if I put more allowances on my W-4 form, then that means the government, or my job, is going to take less taxes to send to the IRS, to the government. So if I calculate it exactly right, I should technically owe the government $0 because I should be paying them exactly what I owe them in taxes slowly throughout the year, little by little, from all my paychecks. But a lot of people don't do the calculations exactly accurately. And so sometimes you either get a refund check because they were actually taking too much taxes from each paycheck throughout the year. And so the government took way too much. And so they have to give you a refund back on some of your money. That's why a lot of people get an income tax refund check. But if it was too little taxes what you were paying, then you will get taxed and you have to pay taxes that you owe. So this year I owed a lot of taxes, but that wasn't necessarily just because of my W-2 or because I wasn't paying enough in taxes throughout my paychecks. It was actually because I had a lot of different gigs. I had a lot of freelance jobs last year that send me 1099s, and those dollars, when you get on a 1099, are not taxed. So when you get your paycheck, of course, you see all the taxes, the FICA, the different all the different things that come out. But when you get a 1099, that means the money that you got was a complete check and nobody took any taxes from it. So I knew, all right, I had all these 1099s from all these jobs that I did. I know that my taxes are going to be really high. But I understood that. And so that made me think, all right, I should just pay. I want to pay my taxes as late as I can. I don't want to have to take that big chunk of money out early in the year. And I kind of realized after I learned about how the tax system works that a lot of people, like when I was growing up, and even a lot of people in general that I know, a lot of people want to get a tax refund check. Like they think an income tax refund check is really good. But if you really think about it, when you get an income tax refund check, it basically means that you've been giving the government too much of your money all throughout the year. Now imagine if you had taken that money yourself and invested it or saved it and got some interest on that money. That same amount of money that you're getting back for your income tax check when you file taxes, that amount of money would have been getting slowly invested or slowly saved up, gaining interest over the year. But when you give it to the government by letting them take it out of your paycheck all throughout the year, you're essentially, basically, you're giving the government an interest-free loan with your money that you earn at your job. So it's not necessarily a great thing. A lot of people think it means, oh, great, I'm getting an income tax check. It's going to be a lump sum of money. That's awesome. But if you really think about what you could be doing with that money, instead of just letting the government hold it slowly throughout the year and then later give it back to you later, like in April, in February, March, April, or whenever you file your taxes, you could do a lot more with that money. So that's just something that I wanted to put out there because I feel like a lot of people, say this a lot, like they want an income tax check or like they can't wait for the income taxes to go shopping or to pay off their debt. And it's just like, well, if every single paycheck was a little bit more, you would be able to take that money and pay that debt slowly throughout the year. Now, I recognize that a lot of people, if they did get a little bit more from every paycheck, of course, then they would go shopping or they would be tempted to go do something with that money and not actually pay the debt or not actually do, what they think they could, what they say they're gonna do, or what they know they should do, and so getting a lump sum all the way in tax season might actually be, feel better for some people. But when you really think about it technically, you're giving the government an interest-free loan. Like that is just the bottom line. So if you never knew that, it is definitely something that you should understand, because if you fill out your W-4 form correctly, or you could even go back to your job and look at it again and look at all of the information that you put in there, you might have the ability to change the way that, your taxes are being taken out of your check every single month throughout the year, so that at the end of the year, when you file your taxes in the beginning of the new year, then you won't actually owe any taxes and you won't get an income tax check. You'll just be squared away. Or maybe you'll get a smaller income tax check and you'll have more money. Basically, you just kind of wiggle around your dollars so that you have a little bit more control over your own money instead of, lending it to the government for free and then getting it back later. So all of that stuff is stuff that I wish I kind of understood and knew a little bit when I was younger, because I really didn't know how to fill out my W-4 form. My job would give it to me and I would be like, I don't know, what's the difference between a W-4 and an I-9 and a W-2? Like all these forms were confusing. But now that I actually understand it and take the time to like really, know what the differences are, I think like it empowers me to make sure that I'm making the best decision for myself and what I want to do with my money. So hopefully that's, information that might help you think similarly, or at least get you thinking about what you might need to learn about taxes if you're not totally familiar with how they work, because every year tax time comes around. You can't avoid paying taxes. You've got to pay at least some taxes. So it's better to know and understand what it's all about rather than to just avoid it. But if you guys have any questions about any of that stuff, please put them in the comment section below or email me at missbehelpful@gmail.com. I also have a number available that you can call and you can leave a voicemail, and I will record a video and post it on the channel as a response to your question. That number is 774-231-8522. And that's all I have. Till next time, peace.